Now we'll be talking about bank reconciliation statement. Bank reconciliation statement. So this is the last topic under Team 3. What is a bank reconciliation statement? Bank reconciliation statement is a statement that is prepared by an account holder for the purpose of finding out the differences between cash book and bank statement balance in order to reconcile and harmonize the balances. When we are talking about bank statement is what we operate on a daily basis. Like any student, all the students, the working class people, those people that are working, they operate banks. You know, we have different type of account. We operate a current account, and likewise we operate a savings account. Savings account is for the students, those people that are not that are yet to work, and the current account is for the people that are working. Now, at the end of the day, at the end of the month, when you operate a bank statement, the bank at the end of the month, you discover that they will be transfer a bank statement showing all the transactions that you have made within the bank. So that is what brings about bank reconciliation. Why are we doing bank reconciliation? It's just to reconcile, you know, when you are making transaction with the bank, you also will have your cash book whereby you are operating. When money comes in for you, you put it in your cash book, and when bank is debiting you, they have to notify you. So at the end of the month, you check the balances, transactions that you have done within the bank, and if there is a kind of discrepancy, then you have to reconcile. Maybe there are some information that the bank has received that you have not been notified. So that's what brings about bank. Bank reconciliation is just a statement to reconcile between your cash book and your bank balance, so that when there is need for reconcile. So what we about reconcile is that when there is disagreement between the bank group, what do you expect? Instead of expecting 3,000 at the end of the day as your balance, you see 250,000. That means your cash book is not does not agree with the bank statement. That's the reason why we do bank reconciliation statement. Now, before we go to the calculation, before we go to illustration, let us now go into the terminologies used in bank reconciliation statement. What are the information that they are likely to occur that can bring a kind of error or the kind of discrepancy between your cash book and your bank statement? Number one, we'll be talking about unpresented check. When we're talking about unpresented check, these are the checks released or issued out to some people, but which are yet to be presented to the bank for collection at the reconciliation date. Now, let me use this example. This is your adjusted cash book. This is your cash book. Let's say this is your cash book. You know, when you draw check to your customer, that means money is going out from your cash. You must have made the deduction from the cash book and notifying you that that person has not presented the check to the customer, to the bank to draw the amount. So, when that person has not presented the check, then that means you have to add the relief deduction, you add it back to your cash book, because if that person has presented the check, then you leave it like that from the deduction. But if that person have not presented that check to the bank, then you add it back. So that are the things we do that is likely to cause a discrepancy between the cash book and when things have been, when you have drawn check and it has not been presented, it will definitely cause a disagreement between your adjustment cash book and the bank reconciliation. Second one, we'll be talking about dishonor check. What is dishonor check? These are another information that can bring about discrepancy between the cash book and the bank statement. These are the check lodged or deposited into the bank but were rejected by the bank. Dishonor check, those are the checks that you deposited. When you collected check from the customer and you deposited it in the bank, that means you must have added it into your cash book that you have collected the check, and the bank dishonored it. And when the bank dishonored it, that means you have to bring it from the adjustment and reduce it from your cash book again. because bank has not honored the check. And what are the things that can lead to check being dishonored is that when the check is being altered, maybe there is a mistake in the date, the signature, the figures, and the words, and so many things that can constitute a bank to dishonor checks. So when you deposited a check in a bank, it has been added to your card book, but when it is dishonored, then you bring it back from the debit side and put it back to the document. That means you deduct it from your card book. That is the treatment for dishonored check. So then another one, we have uncredited check. When we are talking about uncredited check, these are the checks which have been received and entered in the card book and lodged in the bank, but have not been entered on the credit side of the customer bank statement as at the date of reconciliation. So at the time that you are reconciling the bank statement, you discover that the check has been lodged, and when you receive check, the bank and it was entered into the card book and lodged into the bank, but bank has not been credited by the bank, and they did not notify you. I didn't mean they notify you in the card book. You could have left it. So those are the things that cause discrepancy in the when you have received something, when the check which has been received and entered in the card book and lodged into the bank but have not yet been entered. So that is what we call uncredited check. Another one, we have bank charges. What is bank charges? These are the charges paid by the customers to their banks for service rendered to them by the bank. You know, everywhere, any service that bank render to you, you have to pay bank charges. And there's something I would like to. Let's say this is adjustment. This is your bank statement. This is your bank statement. This is the debit side, and this is the credit side. Now, it is a reverse is the case. When money is being taken out of your account, that means the bank will debit you. That is where they apply it in the bank statement. But when money comes into your account, the bank will credit you. And that's why they make some terminology that when they say bank, you have been credited by the bank, that means money has entered into your account. But when there is reduction in your bank statement, that means there is your bank has been debited. So it is quite different from the way we prepare our adjusted card book. So now, under bank charges, you know, any service that is rendered by the bank has to collect the charges for it. Like those people operating current account now, they always pay bank charges and any other service rendered by the bank. So if the bank deduct from your money, they debit your account, and it has not been notified so that you can put it in the credit side of adjustment, then it will cause abeyance in your card book. Then we have the standing order as well. Standing order, this is an instruction given by the account holder to the bank to make a regular payment on his behalf. When we're talking about standing order, is that when a person, the holder of the account, you operating a current account, you order your bank, to make payment on your behalf to a particular person. That means the bank is debiting your account at the end of the day. But as at that time that the bank is debiting your account, you know, when they pay money, you instruct your bank to pay regular payment on your behalf. They are debiting your account, but you have not been notified by the bank that regular payment has been made on your behalf. So, had it been you are notified, you could have put it in the credit side of your cash book. But if that one is not done, you can see that it will cause a disagreement between adjustment card book and the bank statement. Then another one, we have credit transfer. What is the meaning of credit transfer? These are other items that bring about disagreement between card book and the bank statement. These are the checks or cash which are received directly by the bank on the behalf of the firm without notifying them that they receive the bank statement. Let me repeat it again. These are the checks or cash received directly by the bank on your behalf. It might be a firm. You know, we have different type of firms that they are bank oriented. They operate banks. You know, after any money that comes in, the bank will notify them. So when credit transfer is when money comes into your account. You know, when money comes into your account, you know that means you have been credited in your bank statement. So if the bank notify you, then you put it into your card book as debit side because it's the amount that you receive. But if bank does not notify you, that means it will cause a disagreement between adjustment and card book. So he said without notifying them that they have received, the holder of the account that they have received the amount on behalf of you. So credit transfer is another one. Is money coming into your account that your bank did not notify you at the end of the day. So if you want to do that one, you add it again back to your adjustment card book. Then dividend. What is dividend? Dividend on the part of the shareholders. Dividend is the part of profit distributed to the shareholders of an organization. When we are talking about dividend is an entitlement that a shareholder is entitled to at the end of the year. So as a company, you invest your money as a shareholder, you are entitled to dividend at the end of the day. That means they are crediting your bank account. So if bank did not notify you that dividend has been paid on your behalf, then it will cause disagreement. So in order to do the adjustment, you will now add it back because it's the money that you receive. The bank you have already been credited by the bank. Then, had it been bank has notified you, you will have added it. But when bank did not notify you, then you prepare the card book and add it into your card book. You see the same application of double entry. That is also what we are dealing with in this bank statement, and that is why I told you and I've